Okay, let's try this quiz on financial accounting on short-term liabilities. So question number 1 says, which of the following is considered a short-term liability? So make a choice. I'll be choosing the correct answers, but be objective, do it on your own, be subjective. Try to choose something you know should be. So we have patents, we have accounts payable, we have long-term bonds, we have buildings. The answer here is accounts payable. Account payable represents amounts owed to supplier and is typically due within a year, making it a short-term liabilities. The second question: what's the usual time frame for classifying a liability as short-term? Less than 5 years, less than 10 years, less than 1 year, less than 6 months. So what is your answer? Pick before we choose the correct answer. So a liability is said to be a short-term if it matures within a year, or what you might call less than 1 year. So that is it. The obligation is expected to be settled within 1 year or the company's operating cycle, which is longer. Now, which of the following is not a short-term liability? Accrued expenses. Notes payable due in 9 months. Mortgage payable due in 15 years. Unearned revenue. Unearned revenue. Which one is it? Accrued expenses are current assets. They are not liabilities in the first place. Notes payable in 19 months are long-term or middle-term liabilities. Mortgage payable in due 15 years is long-term liability. Unearned revenue are revenues that a company has received money, but they have not given the service or the goods. So it's like they are still owing those they receive money from. So it's an example of a short-term liability, and that is the correct answer. I say mortgage payable due. What expenses is a short-term liability. I got the whole thing wrong, please. So the one that is not is short-term liability is this one. I got it wrong, please. So this is exactly, I didn't get that I was talking about not. Please, 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 please. No payable due in 9 months is a short-term liability. Unearned, whatever, accrued expense too, it's a short-term liability. It's a prepayment that is a short-term current assets. Prepayment is current asset. Accrued expense is a current liability. That's short-term liabilities, please. So the one that is not is this one. Now, wages owed to employees but not yet paid are classified as accrued expenses. They are classified as accrued expenses. So that is what it is. Then, which of the following best describes unearned revenue? Car receipt before providing goods or services. That's what unearned revenue is all about. And they are parts of the short-term liabilities. So we made mistake in that one. That was why we failed it. It was just a complete mistake. So I know it, but I misread the question. So this is what you learn financial accounting wherever you're watching this video, online, on Facebook, on YouTube. Please follow us and get more of this. If you have a question on stuff like this, please ask. I'll be much more ready here to answer you. I wish you the best. Thanks for watching.